In this video, I'm going to share with you how I choose stocks for the wheel strategy. The wheel strategy is a very famous strategy and I already made videos on the subject on what is the wheel strategy, for example. And if you haven't watched it, I'll put a link into the description of this video where you can go watch that video. I also give a spreadsheet where you can track your cost basis, so don't hesitate to watch it before watching this video. I'll share with you the different criteria that I use so as to select the stocks that I'm going to trade for the wheel strategy, and also show you using a screener how you can input those criteria so it can make the process way easier for you. But before diving into this video, if at any point you find this video interesting or helpful and you actually learn something, then don't hesitate to subscribe to my channel and liking this video. That's the best way to let me know that you like to see more videos like this one. So as I said, if you have no idea what the wheel strategy is, it's probably better if you go watch the video that I made on the subject first, where I explain what is the wheel strategy step by step, so maybe it's clearer for you. But if you already know what the wheel strategy is, let's get right into it. So the way I'm going to explain you how I choose the stocks for the wheel strategy is going to go step by step with the screener. So what I really recommend you to do right now is to go into the description of this video. You'll see the link of the Finviz Screener in the description. I really suggest you to click on it and we're going to go together step by step. I'm going to show you which type of criteria I like to put into the screener so you can maybe do the same at the same time on your end, so you can do it at the same time as I'm doing it. So as you can see, I am in the Finviz Screener. So this is the screener that you will find if you go into the description and you click on the link. You can see that there are basically all of the filters up there, and there are then all the results down there. You see that there are different filters that you can put, for example, more descriptive with the index, the dividend yield, but you can also talk in terms of fundamentals if you want to screen stocks based on their fundamentals. You can also use some technical analysis if you like to screen stocks that way. So the first thing that I'd like to focus, and this is really the first criteria that is super important for me to focus on, first of all, is liquidity. Liquidity refers to basically the number of traders like trading a certain stock. The more participants there is trading the same stock, the more liquidity there is, and vice versa. If no one is actually trading a stock, we say that it's illiquid. And the benefit of trading only liquid stocks is that you're going to be filled at the best prices possible. Because if, on the opposite, you go trade an illiquid stock, you're going to see that first, it's very hard to get filled. You're going to get filled at bad prices. You won't be able to get out of your trade with your profits. I mean, there is no reason why you should go trade illiquid stocks. Like, that's why the first thing to think about is liquidity. So if we go into the Finviz Screener and we try to input that liquidity criteria, where should we go? Well, when we are in the screener page, if you go where it's written current volume, you can see that if you click on it, there's going to be plenty of different choices. So which one should you choose? Well, personally, I like to stick to stocks that have at least 2 million shares traded per day. Of course, you can go for whatever you want, but going for 2 million shares at least being traded per day is going to help you at least ensure that the stocks that are going to be shown are at least fairly liquid. So if we click, for example, over 2 million, you see that the stock screener is going to get adapted directly. I don't know if you saw before, we were at 160 pages of different stocks. Now we are only at 45 pages of different stocks that are resulting out of this criteria. So you see that we already eliminated a lot of different stocks that we could have chosen because they were just illiquid. So now we are only focusing on liquid stocks, which is really nice. And now the second criteria that I think is very, very important. That's something that I like to use for the wheel strategy, and I'm going to explain why. I like to go for medium price stocks. What does that mean? Well, I like to trade stocks using the wheel strategy that are around $40 per share, $50 per share maximum. And there are reasons why. When we use the wheel strategy, we're going to have to sell puts, we're going to have to buy shares at some point, and we're going to have to sell calls. And the thing is, I always like to think about the worst case scenario when I sell, for example, naked puts or when I buy shares. What is the worst case scenario? Well, the worst case scenario, if you, for example, sell a put on a stock or you have, for example, shares, is if the stock falls to zero and, for example, gets delisted. And I know that sounds like a crazy outcome, but that's actually happened way more times than what we think, and it's not something that is that unusual. And the reason why I like to go for stocks that are priced around $40 per share is that if the stock falls to zero and let's say gets delisted, at least I'm not going to lose that much money. Meaning that if I have 100 shares at the stock price at $40 per share, then maximum I'm going to lose $4,000 because I will have bought 100 shares at $40 per share, so $4,000 in terms of investment, and if it gets to zero, that's the maximum that I can lose. I don't like like to go for expensive stocks when using the wheel strategy, and the reason is very simple. If you, for example, trade Amazon and you like to use the wheel strategy on Amazon, and at some point you need to buy 100 shares at, for example, let's say $3,000 per share, then it's $300,000 that are being allocated just for Amazon. And of course, the probability of seeing Amazon getting delisted is very, very low. However, it still exists. And my philosophy is that I'd rather go for a stock that is like around $40, $50, where I risk way less money compared to a very expensive stocks where the more expensive it is, the more risk you're actually taking if the stock, let's say, falls to zero. And another benefit of going for stocks that are around $40, $50 per share is that you need less capital, you need less buying power so as to actually use the wheel strategy. And that's a very nice thing. If you have a small capital, if you don't have like tens of thousands of dollars so as to trade, then you might as well go for cheaper stocks because it's going to take you less capital, it's going to be more affordable for you, and you're going to be able to manage your risk a lot better. That's how I started using the wheel strategy. I started focusing on very cheap stocks because I just didn't have the money so as to invest on very expensive stocks, and I started having more and more capital. I started going for more expensive stocks, but always with a limit of around $40, $50 per share. And I found that using the wheel strategy for stocks that are around $40 per share, $50 per share was actually way better because I needed less capital. I could manage my risk better, meaning that if the stock falls to zero, at least it's not as if I had traded a $200 stock. And if I want to start taking more risk, I can just start using the wheel strategy on different stocks that are around $40 instead of just one big stock at, let's say, $200 per share. I could go for 2 or 3 stocks that are around $40, $50 per share. So at least I spread my risk and I don't just have my risk in a single position. So that was a long explanation, but I hope it makes sense. So if we go into the Finviz Screener and we try to input that, if you go into the price filter, you're going to see that when you click on it, there's plenty of different options. You can see if under $1, under $50, over $10. What I like to choose is, let's say, $20 to $50. And that basically encompasses the range of stock that I like to trade between $20 and $50 per share. That's usually where I'm going to focus for the wheel strategy. That's going to be stocks that are around $40 per share, $30, $50, somewhere around this basically. And you see that before we had 45 pages of results just with the volume filter, and now we're down at 12 pages of stocks. So you see that we're reducing the number of candidates, and that's exactly what we want. We want to reduce the number of candidates so we have in the end a list of liquid stocks that are around $30, $40 per share, that are really liquid, that you can trade for the wheel strategy. But it's not over. So let's see what is the next criteria. The third criteria, and that's something that is quite special, that's something that I came up with that I really like to use in general. I like to use the wheel strategy on stocks that recently went down. And the reason for that is that when you sell a put, you're bullish on the stock. So if I can avoid selling a put when the stock is at its highest, then I'm going to do so, because at least if I sell a put on a stock that recently had a pullback, at least I'm not going to be assigned at the highest point possible. Because the thing that you don't want is to, for example, sell a put on a stock when it's at its highest, and then the stock starts going down and you just get assigned at the worst strike possible. That's why I like to use that criteria, meaning that I'm going to start using the wheel strategy on stocks that had recently a pullback. So at least I know that I'm not going to be assigned at the highest point possible, and I know that I have this caution of safety. And I'm going to show you examples after that with like the stocks that are being given by the screener at the end, so you can see what I mean. So don't worry if you don't understand everything right now, just follow me, follow the filters, and I'm going to show you examples after that. So if we were willing to input that into the screener, meaning stocks that recently got a pullback, how would we do that? Well, if you go into the technical columns here, if you click on it, technical, you're going to be able to input filters that are more from a technical analysis standpoint, which is basically what we want here. What I like to use, the filter that I like to use is the performance filter. So if you go on the top left corner, you see that there's going to be a performance filter. If you click on it, you see that it's going to basically allow you to filter for stocks that have had some performances that you want. So for example, you could only see stocks that today went up or today went down, or at least today lost 10% or this week. I mean, basically whatever the performance that you want to have, the screener will show you stocks with the performance that you chose. So what I like to do personally is to choose the week down performance. And what does that basically do? Well, the screener is going to show me stocks that went down during the last week. And that basically refers to that pullback that I was talking about. As I said, I like to use the wheel strategy. I like to start the wheel strategy by selling puts on stocks that recently got a pullback, so at least I ensure that I'm not selling a put at the highest strike possible. At least I'm having this cushion of safety. And selling a put who actually got a performance where the stock went down during the last week is exactly doing this, because now I'm selling a put on a stock that recently went down during the last week. So I'm actually doing this, and it's being given by a screener, which is quite nice. And once again, you see that before we were at 12 pages and now we are only at 7 pages. So you see that we are really shortlisting candidates, and we're really making sure that we only have the best candidates possible for the wheel strategy. And if we look at the different stocks that are being given by the screener, we can already see the pullbacks that I was talking about. For example, here they show Enbridge from the stock ticker ENB. And if we look at the chart that is being given, you see that the stock price basically went down during the last week, which refers to that pullback that I want to see when using the wheel strategy. I want to start the wheel strategy on the stock that just had a pullback, so at least I'm sure that I'm not going to sell a put at the highest price possible. And if I keep going down, you see that every time you put your mouse on the stock ticker, it shows you the chart directly. So FCX, same thing. You see that, for example, BSX, the same thing. I mean, basically all of those stocks have had a performance where they went down during the last week. So I think that's quite nice to be able to see these type of screeners that show you the stocks that went down during the last week, so you can really adjust your strategy and you can really choose the best candidates possible for the wheel strategy. And to give you an example of what I would do once I'm at that point, and once I've seen, for example, I've reduced my short list to all of those stocks, well, I'm going to go, for example, stock by stock, and I'm going to choose a stock that I actually feel like trading for the wheel strategy. So for example, HPQ would be, in my opinion, a good candidate for the wheel strategy. And if we go, for example, into Tastyworks to check HP, you see that since October, it literally went from $17 to $35, and that's where I think that using that week down performance is actually very useful, because what you don't want to see is the following. Let's say that the stock is at $35 and you start selling a put that is just below, that is, let's say, at the 35 strike. So basically you really sell a put when the stock is at its highest, and then the stock starts going down. So you see that it went down to $32, and that's where you would be really pissed, because you're going to be assigned at a very high price. You're going to be assigned literally at the highest price possible. That's why at least having stocks that just got a pullback, at least if I start selling a put now, I'm going to try to sell, for example, the 31 strike, which is going to offer me some kind of cushion of safety. I'm going to have a margin of safety where at least I didn't sell a put at the highest strike possible, at least took advantage of that pullback. After that, once we're there, personally, that's where I'm going to stop in terms of criteria, and I'm going to look more on an individual basis to see which stock is going to help me. So after that, you obviously still have a lot of choice. I mean, you see that we still have 7 pages, but at least we went from literally no filter at all to reducing that to 7 lists of potential candidates. What I personally like to do is filter after that the stocks by clicking on the market cap that you can see here, and basically it's going to give you the stocks that have the biggest market capitalization first. And I like to do this because market capitalization is quite important for me. I want to trade stocks that are really solid, with big financials, with good financials. So I'm going to filter stocks by the market cap, and I'm going to go for very solid stocks. For example, I would go, as I said, for HP, but after that, using the market cap is really just my personal opinion. I mean, you can do after that whatever you want. It's really up to you to choose the criteria that you want. I just wanted to share with you the different criteria that I use so as to find good candidates for the wheel strategy, because that helped me to actually use it that way. I hope you found this video useful, where I share with you some of the criteria that I like to use so as to find good candidates for the wheel strategy. Let me know in the comment section if there are any other criteria that you like to use so as to find good stocks for the wheel strategy, and if there is anything that you look at that I haven't mentioned in this video. I'd be curious to hear what you use. If you have any question, as always, about the screener or anything that I said, don't hesitate to comment it below. I'll be happy to answer any question that you might have. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.